Hey everyone, welcome back to Corporate Decoder. Today, US GoldMining Inc, USGO just filed an 8K revealing an extension to their warrants, and I'm seeing a common pattern that could signal trouble ahead. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about giving investors more time to use their warrants, but it also raises questions about the company's ability to meet its obligations. So, what is the big deal here? GoldMining Inc. announced they've amended an agreement related to their warrants. Warrants are essentially options that give you the right to buy a company's stock at a specific price. Think of them like a coupon that expires. The company has the power to extend the expiration date of these warrants, and that is exactly what they've done. They've pushed the deadline back from the 24th of April, 2026 to May 1, 2026. This is to give warrant holders more time to exercise their rights. Now, why would a company do this? Usually it is because they believe the stock price might go up before the warrants expire, making those warrants valuable. Or it could mean they need more time to improve their financial situation so that holders will actually want to exercise them. The company's common stock, which has a par value of $0.001 per S-share, is traded under the ticker USGO. And the warrants themselves, which let you buy one share of common stock for $13, known by the ticker symbol USGO, are being extended. The actual amendment to the warrant agreement was made on the 23rd of April 2026. This agreement is with Continental Stock Transfer and Trust Company, which acts as the warrant agent. Remember, this is all happening in relation to their initial public offering where they sold units of stock and warrants. The original termination date for these warrants was set for the 24th of April 2026. However, the company can now, at its own discretion, push back this date. This means they have control over how long these warrants remain valid. So the board of directors officially approved this week extension. The warrants will continue to trade on the Nasdaq Capital Market under the symbol USGO until May 1, 2026, and people can still exercise them up until that new date. This amendment and extension is a pretty common move, but it often comes on the heels of other financial pressures. We don't have detailed financial tables in this specific 8 as it is focused on this warrant extension agreement. However, looking at their recent filings and the general context for companies with warrants expiring, it often suggests potential cash flow concerns or a need for more time to boost the stock price above the exercise price of $13. When companies extend warrants like this, it can be a signal that they are struggling to get their stock price significantly above the exercise price. If the stock price were much higher than $13, warrant holders would be rushing to exercise them to capture that profit. The fact that the company is extending the deadline suggests either a lack of immediate demand from warrant holders, or a strategic move to buy more time for the stock to appreciate. Historically, when companies in the microcap space, which GoldMining Inc. could be considered, extend warrants, it is not always a positive sign. For instance, companies facing significant financial headwinds sometimes use these extensions as a way to avoid immediate dilution from warrant exercises while they try to turn things around. Think about it this way, if GoldMining Inc. really believed their stock was going to soar past $13 in the next few days, they might not need to extend the warrants. They might let them expire worthless or have them exercised already. The extension gives them a bit more breathing room. The risk here is what is known as dilution. If many warrant holders decide to exercise their warrants, it means the company has to issue more shares. This increases the total number of shares outstanding, which can reduce the ownership percentage of existing shareholders and potentially drive down the stock price per S-share, if not accompanied by a proportional increase in company value. The fact that they are extending the warrant deadline from the 24th of April to May 1st, just a 1-week extension, is quite short. This might indicate they are testing the waters. Or perhaps the original expiration was very close and they wanted to give a minimal extension. The key takeaway is that the company's management feels the need to give warrant holders more time, suggesting that the stock price might not be at a level where immediate exercise is highly beneficial for those holders. What I am watching for is how this plays out leading up to May 1st. Will GoldMining Inc. USGO see a significant surge in its stock price, prompting warrant holders to exercise, or will this extension simply postpone the inevitable, potentially leading to further dilution if the stock doesn't perform as hoped? It is a delicate balance for the company, trying to provide value to both its shareholders and warrant holders. The biggest story here for GoldMining Inc. is really about its operational performance and its ability to increase shareholder value enough to make those $13 warrants attractive. This filing, while seemingly minor, can sometimes be an early indicator of underlying financial pressures. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.